Hey, good morning, everybody. Thanks for tuning into the webcast today. This is Mike Toy with National Brokerage, and I'm joined here with Greg Sabala. And today we're going to be talking just about some overall concepts about just how to make life insurance simple again. I know there are a lot of different concepts out there. Some are more complex than others, but today we just want to focus on some simple tips and tricks to help you sell more life insurance, ranging from sales tips to underwriting niches to carrier selection. So that's the goal of today. So without further ado here, I'm going to skip to the next one. Quick intro, National Brokerage. We're a full-service life insurance and annuities broker. We've been partnering with agents and agencies since 1996. You may have also heard of NBGO if this is your first time tuning in. This is the home of NBGO. That is the application service where our app team calls and does the application over the phone on your behalf. So that being said, I'm going to turn it over here to Greg Sabala, and he's going to start on the next slide.
Well, I get the easy stuff. Good morning, everybody. I get to talk about what a client's really looking for. And from our perspective, we kind of want to shed light of why we feel these are the main things that a client's oftentimes looking for when they're coming for life insurance. A couple of reasons. For one, our years of experience as a brokerage firm, but also two, with our banking partners, we've had the luxury of having a lot of client direct exposure. So we have a lot of clients that are speaking to us about what their needs are and what their aspirations are for life insurance, but also what they are coming to the table thinking of life insurance and what they're currently looking for. So, almost everybody's looking for a simplification of the insurance process. I think we as writing agents and clients are obviously gravitating to making insurance an easier thing to get to the finish line. Right now, it's a very daunting process. The applications are very lengthy. So clients are looking for a better way of doing that, and so are agents as well. Quick results. Clients might oftentimes be looking for, hey, I need this coverage. I need it pretty quickly. There's different ways to attack that. We can bind coverage with a fully underwritten product, or we can try to look at more condensed underwriting, depending on what the hot buttons are for your clients. No medical exams. Again, similar process, so we can take a look at those things for the clients. Best possible rates. That doesn't always coincide with no medical exam. So these are just different hot buttons that we're hitting upon that you can discuss with your client. And with that information, if you talk to your national brokerage rep, we can say, okay, from these hot buttons, if the number one thing is no medical exam, okay, we know what we're doing. If the number one thing is the best possible rate, they're going to be shopping us around and things of that nature, again, we know what we're doing. So that's what we're trying to find out from a client is what is the most important thing to them when they're looking for the life insurance. Asking more about life insurance, asking more out of life insurance, what's in it for me? That's the millennial attitude that we find a lot of times is, what is in it for me and how can we best accommodate them? We're going to kind of discuss that a little bit as well. Options for life insurance, final expense, living benefits, that's part of what clients want to have and kind of the what's in it for them. Cash accumulation, which is a good opportunity for retirement diversification. We can really walk you through how a client can use cash accumulation on a policy in their retirement years to help diversify when there's a down market and their 401k gets hit. Last thing they want to do is take a disbursement when there was a down market. It's a double whammy to their retirement income going forward. So in those down years, a lot of times a person wants to have some diversification within a life insurance policy to take out a cash loan of their life insurance policy on the down markets so that 401k has the opportunity to recover from that down market. So we can discuss that. We can discuss those concepts, but just wanted to kind of plant the seed that this is what a client's oftentimes looking for. One of the ones that's kind of a lost art is the return of premium. I think you're going to see it more in the permanent plans than you do term. We do have both. But just keep that in mind. If a client's like, hey, the thing I hate about life insurance is I pay all this money. At the end of 20 years, I don't have anything to show for it. Well, you can accommodate a client with a return of premium. There's different ways of doing it, different carriers that excel in that marketplace. And that's something that, again, we can help guide you with different policies at different carriers. As for the simplification of the process, a couple of ways that we were attacking that. One, simplification means a couple different things. Is one, do they just want no paperwork? Do they want to go non-med? What are they looking for when they're looking for simplification as from the client's perspective? also from your perspective as a writing agent, if you're trying to simplify your day in and day out of writing life insurance, what's important to you and what are you trying to do? So we're trying to make it easy to understand options of no paperwork to the client. It's usually a phone interview if we're doing MBGO. We also have DocuSign, so basically the client can sign the application and so can you on your phone or your iPad or whatever you want to do. And there's no surprises as well. A lot of the clients are tired of, I send in an application, takes them 60 to 75 days later, I don't know anything in between, and then I get a policy. That's not what we do. We auto-communicate with the clients to keep them apprised of the changes, keeping them engaged in the process. MBGO, again, we're going to call the client on your behalf and work through all the different nuances of the application and keep the client in the loop, and that's the MBGO process. Again, if we're choosing a non-med, we don't shy away from those. If you guys want to do something direct with the carriers, there's a lot of carriers out there that are attractive to that. There's the Sagicors of the world, the SBLIs, and a lot of the other carriers that have direct opportunities to send an application in. If you want to know one process, a little easier process, MBGO can be accommodating to carriers as well and still capitalize on the non-med basis of the product. So just food for thought that you don't give up one to take advantage of the other. And if you're looking for a convenient, hey, I just want to know how to navigate one site, that would be the MBGO. Nothing against, though, the carriers when they're direct sites. They do have a value. They do have they do a really good job, and we can walk you through the carriers that are best suited for that part of the industry.
All right. Thanks, Greg. Okay, so I want to just shed some light on the definition between some of the different terms out there. I know terms like non-med and simplified issue and guaranteed issue, they get interchanged a lot. And, everybody's guilty, from the carrier to us, to agents, to clients. We've all heard it. So I just want to shed some definition on the three main types. So non-med, what that really refers to is just no medical exam. It's not guaranteed issue by any means. It just means there's not going to be a medical exam. There's still normal underwriting, but no medical exam. Simplified issue, on the other hand, that means there is more automated underwriting. So there may still be a medical exam, and oftentimes there is. In fact, most times there is. But it means that the underwriting goes through more automation. So there's less manual work, and that usually results in quicker turnaround times, because when there's automated underwriting, it doesn't take as long. You don't have to wait on somebody. So quicker turnaround times. One quick note on that too, I'll point out, most simplified issue programs out there will at least try to go non-med, but it's not guaranteed that that's going to be the case. So we don't really tout that it's not going to have a medical exam. So just something to be aware of. Guaranteed issue, on the last hand, that's simply, just like the name implies, it is guaranteed to issue as long as the client falls within certain age brackets. Usually, I'm speaking generally here, but it's usually somewhere between 50 and 80. As long as they fall within that range, it is guaranteed to issue. Couple quick notes. This is for final expense. It's never, it shouldn't be your go-to option. And there's usually a graded feature. And let me explain what that means a little bit. So graded versus level death benefit, you'll hear that term in final expense a lot. Graded means there is going to be a time period where they don't pay a death benefit. I'll give you an example. If you've got a 2-year graded period on your final expense and the client dies within that first 2 years, there's not a death benefit paid out, but all the premiums are returned, usually with interest. So that's what that graded period refers to. If it's level, that means if they were to pass away and first day of having the policy, full death benefit pays out. So that's a quick run through of non-med versus simplified issue versus guaranteed issue. I'm going to go on to the next one here. What most clients don't know, and what I mean by that is it's not that they won't understand, it means they just probably don't know. And that's where our job and your job comes in, so that we can help illuminate some of these things and help them make more informed decisions and help you with your business. So a couple of bullet points here. Living benefit riders, as Greg mentioned earlier, what that really means is that if they were to become critically sick or chronically sick or terminally sick, they can access some or all of that death benefit while they're still alive. A good sales tip on that is, this is an easy way to transition into talking about life insurance, is you just ask the client, what kind of life insurance do you have, the new kind or the old kind? Naturally, that's going to prompt a response of, well, what's the new kind? Oh, the new kind is the type that you don't have to die to use. Oh, well, tell me more about that. So that's a good sales tip. As simple and sort of corny as it might sound, it's very effective, and I would add that to your repertoire if you don't use that already. Cash accumulation in products. Cash accumulation, so that usually refers to indexed ULs. It could also mean whole life or other types, but usually that's going to refer to IULs. So a lot of clients don't know that they can do that. They don't know that they can overfund a policy, and it's a foreign concept. Why would I pay more than I'm required to pay? Well, if you pay more, more goes to your cash accumulation, which builds on a tax-deferred basis. So just illuminating some of those things. And real quick, I'm going to hand it over here to Greg.
Well, one of the things that I have discussed with, we have a lot of different accounts that primarily focus with property casualty. And sometimes it's identifying with your client and making sure that they understand, cash accumulation, oftentimes just something like Mike said, just foreign to a client. And what I would attribute a lot of it to is when you're talking about the return of premium, the benefits of that type of, is obviously you're going to have cash accumulation within the policy. But I would just say, it's kind of a concept of this. You're not always going to pay more for it. So we'll discuss it on the IULs versus the GUL. Actually, I just got off a phone call prior to this call, and the situation was actually just the opposite. The IUL is actually less expensive. But even with all that said, let's say, for example, it's a little bit more expensive. I would ask, one of the people that I deal with a great deal and does a primarily property casualty, the question they've been asking to their client is, if you could buy car insurance, and instead of paying $100 a month, you paid $110 a month, but at the end of 5 years, you get every penny back, would you do it? Or at the end of 10 years, would you get every penny back? Would you do it? And some answers are going to be no. A lot are going to be yes. So I can buy my car insurance, and if nothing happens to me, so it was wasted money, I could get all my money back. A lot of people would gravitate to that type of insurance. That's part of what we're talking about when we're talking about cash accumulation. I've already hit upon some of the loan privileges on a down marketplace, things of that nature, but also just pure flexibility within the plan. With cash accumulation, it allows you to shop around that client later in life. 10, 15 years from now, if they've got a permanent plan with cash accumulation, they can take the next latest, greatest product, 1035 their money into that product so they're not paying a high premium, and it allows flexibilities not only today, but in the future. So it's one thing, you're not handcuffing your client to a policy, you're liberating them to basically have different policies in the future. So it's just something to discuss with your client and have a nice conversation to see what exactly is their hot button.
Thanks, Greg. Those are good points. IULs are not always more expensive. I think we get stuck in that rut, as I just demonstrated. There are cases where they are less expensive, and I like that analogy. So on that too, one bullet point I'll hit on the cash accumulation part is the ROP feature. A lot like what Greg was saying, a lot of the new guaranteed ULs that are out there have a return premium feature built in somewhere. A good example would be Anico, for example, or American National. American National has a GUL where in year 15, you can surrender the policy and get up to 50% of your premiums back. Then in year 20, you could surrender the policy and get 100% of your premiums back. And then you have the option again in year 25 to surrender the policy and get all your premiums back. And that's just one example. There are many carriers out there. AIG is another one. There's a few of them out there. So they all work a little bit different. Give us a call if that's a feature that is appealing to your client at that time, you're not sure which way to go. Give us a call. We can help you understand some of the nuances. One last piece on the ULs before I move on to underwriting niches. So I just want to point out a big difference between ULs. An easy way to wrap your mind around it and to explain it to a client is the two main types of ULs out there are a guaranteed UL and an indexed UL. Guaranteed UL focuses on long-term guarantees, with little to no cash accumulation. The IULs focus on heavy cash accumulation with shorter guarantees. So those are the two opposite ends of the spectrum, and there's ULs everywhere in between. But that's a good way to kind of wrap your mind around the differences between the different ULs out there, and a good way to explain it. So moving on to underwriting now. So one thing I want to say about underwriting before I dive into this real quick is just that when you're in competition out there with other agents and other agencies, we all share the same rates. So no agent can get a better rate than another agent. Clients don't understand that, but that is the truth. So a lot of times what it really comes down to is just either knowing some of the nuances and some of these underwriting niches so that you can point people in the right direction the first time, or having a resource that you can turn to and say, hey, I've got a guy, here's a situation, what's the best carrier? We can be that resource for you, and that oftentimes that is exactly what we do. That's our bread and butter. But that, in my opinion, is one of the best ways that you can differentiate yourself from the competition, is just either knowing these nuances or having a resource to turn to that knows these nuances. So I'm going to go into just a couple examples here. Marijuana usage, that's the million-dollar question out there because it's legal in some states, it's not in other states. It's legal for medical in some states, other states it's not. So marijuana is a big underwriting niche right now. Here are the things to look for. Number one question, if somebody says that they use marijuana, how frequently do you use it? Not how much, but how frequently. Is it twice a week? Is it twice a month? Is it 5 times a week? You know, it doesn't really matter how much they use at a time. It matters how frequently. I'll give you a couple examples. Prudential is a carrier right now that is doing pretty good with marijuana. So you can use marijuana up to 2 times a week and still get standard plus non-tobacco rates. Other carriers, on the other hand, you can use the same amount and you'd be looking at a standard tobacco. Huge difference in premiums there. And if you didn't know that nuance, you could easily go with the carrier you always go with and end up getting a worse rate and then possibly losing the sale as a result. So that's something about marijuana usage. Application, that one is another tricky one out there. It's good to find out what type of plane they fly, or if it's a helicopter, how many hours they've got, do they have certifications and whatnot. Some carriers are better than others, but that's what you look for. Cigars and chewing tobacco. This is another one kind of like marijuana. You want to find out if you use tobacco, what type is it? Is it cigarettes? Is it cigars? Or is it chewing tobacco? If it's cigars, how often? I'll give you a couple good examples. Prudential actually comes up on the list again for this one. With Prudential, you can smoke cigars or chew tobacco and still get non-tobacco rates, even if nicotine is in their system. Other carriers are slightly different. You might get non-tobacco rates if you don't have nicotine in your system. And then other carriers just simply don't touch it and your tobacco no matter what if you use chewing tobacco or cigars. So that's a good example for that one. Diabetics, here's what you look for there. With diabetes, when someone says they have diabetes, you find out is it type 1 or type 2. Usually it's going to be type 2 in our experience. That's the more common one. Ask if they know what their A1C score is. If they know what their A1C score is, ask when they were diagnosed with diabetes. Those are the 2 main questions you want to ask there, because with that knowledge, we can really aim the right way and figure out which carrier is going to be best and quote them accurately as possible the first time. Because what you don't want to do is quote best possible rate out there and then have to explain bad news later why they came back, table 2 instead of preferred not tobacco. So that's what you look for with diabetes. Sleep apnea, that one, we've come a long way in sleep apnea. It used to be really hard to get a decent rate, excuse me, or get coverage at all if someone had sleep apnea. But typically what they're looking for now is someone who is within compliance. Are they using their CPAP machine, that type of thing. So some carriers, you can get up to standard plus non-tobacco with sleep apnea now. It just comes down to that compliance. So if you come across somebody who says they have sleep apnea, find out if they're compliant with their CPAP machine, and then we can quote from there. Height, weight, this one changes here and there. Prudential, again, I'm not trying to pick on them today, but they were the best one for height, weight issues for a long time. But interestingly enough, as of recently, Banner happens to be the best carrier out there for height weight issues. They're really aggressive with that right now. Prudential still has certain nuances. Like older age clients, they're pretty aggressive on getting good rates there. But overall, Banner has the best height weight ratio charts. So these are just some general examples. Of course, you're going to come across something that you never would have dreamed up and that no one's ever, come across this combination before. So give us a call. That's what we do. Finding out what the nuance is to one of these issues is one thing, but when they have a combination of a couple of things, that's where it gets a little tricky, and that's where our experience can really help you, because we've seen a lot of those things, and if we haven't, we have resources that we can turn to as well, that we can call and say, hey, here's the situation. What can we typically expect for an underwriting rate? So I hope that helps. That's just a real quick overview. I hope that helps explain that a little bit better. And with that, I'm going to turn it back over to Greg.
Yeah, before I get out of the slide, to Mike's point, everything that Mike mentioned plus family history can affect your client in a negative manner. There are just little things that can arise. With that said, the details. Just any time that you can get us any more details, we can shop around. Family history, not all carriers view cancer history as everybody else. So basically, each company is very specific to what they do. Height, weight, like he mentioned on the older ages, it's kind of a little niche that they have. They get more aggressive on the older ages because they feel after you get to that age, you're not going to gain much more weight. You kind of are what you are, which is kind of a unique thought process. But one thing that almost every carrier gravitates to generally is control and compliance. If your client has controlled whatever, high blood pressure, cholesterol, what have you, and they're compliant with their physician, you're going to have a lot more flexibility with an underwriter than a person that's erratic control because they don't go to their physician all the time and they're not really a good patient because they don't have really a confidence in the client, staying up on it as well. So just kind of when you're speaking to your client, that's generally the theme that we're looking for, is control and compliance within any of the impairments. And if you have people with multiple impairments together, obviously those are real big X factors. But if their person's doing everything they can do, staying under the watchful care of their physician, we've got a much better fighting chance. So just kind of keep that in the back of your mind when you're talking with the clients. Just to finish up here, actually, we want to tell, National Brokerage is not just another brokerage. We have a lot of people with a lot of experience here, our case managers. We've had, since I've been here. So I've been here 21 plus years. And we've got multiple case managers that have been here at the same time as well, and they came from an insurance brokerage experience before. So we've got people with 20, 30 years of experience. Definitely utilize it. We don't want you guys doing all the heavy lifting. We want to earn our keep. And if you can provide us information about your client, we can do the shopping around to make sure that we're doing the best thing, and maybe opening your eyes to different opportunities that the client may not have even asked for. Living benefits is a big one, but I think if you can be a little bit different to your client, I think that's a big change. And there is a reluctancy, I know, with some people to, hey, I'm just going to quote everyone preferred and see what I get because I'm in a competitive situation. I disagree with that assessment, and what I would respectfully say is if you arm your client with a little bit of knowledge, I'm not saying a ton, but if you just walk them through, hey, carriers do height, weight, that's a factor. They look for medical information, and you find out from your clients, hey, my height, weight's kind of suspect, and, I'm diabetic. But if you walk them through the importance of that and what a carrier does and kind of everything we've discussed here, if they get a preferred plus quote from somebody else, they're going to look at that person as the quote unquote used car salesman. They're going to say, are you kidding me? I know I'm not I know I'm not preferred plus because my other agent explained to me what a preferred plus is. And I think that does gravitate. That is a worthwhile conversation. And I do think that builds a better rapport and relationship with you and your client when we're forthcoming and do more field underwriting to provide them the best rate classification. So, keep that in mind. Give us a call. NBGO, we've hit upon it before. I'm not going to really go into great detail on that. But for those of you that aren't familiar with NBGO, talk to your marketing rep. We'd love to walk you through it and kind of show you how we're revolutionizing the industry. With that said, if you have any questions, give us a call. The number is 800-377-6344. We do appreciate your time and look forward to working for you on the next case. Thank you very much.